This video will serve as a major warning to those of you that are holding Bitcoin, because we at this stage have now seen roughly a 50-day uptrend from that low to where we are without a single pullback, and we've also risen up by about 50% in that time as well. So by all accounts, we are now overextended by time and potentially overextended by price as well. So there's two ways that I see this happening, but both outcomes result in the same thing the way I see this going, and I want to talk about that with you in this YouTube video. Now, the first thing that I have to get out of the way is that I am very bullish on this market. This video is not a bullish one, but I am bullish. My money has been pointing to the upside. I'm now in a bigger profit than the time that I took this screenshot at. I've literally made more than 700% profit on my Bitcoin long position, and just like having multiple wives, if one makes you happy, why not have multiple? And if we do take a look at what I've posted out here on the Twitter page right here with this beautiful tweet, obviously I'm just shit posting, just having fun with it. Locked in another top percent trade today, proof that multiple trades like multiple wives is the way to go. If one would make me happy, surely another would make me happier. We've got that Tron position also, by the way, at a much higher profit number than this. This screenshot was taken obviously yesterday, just yesterday if I'm not mistaken. But if we do take a look at where these trades are now, I am in a much bigger profit on both of them. I want to show this to you right here in this YouTube video as well. And the reason that I'm telling you guys all of this is because while you're going to see a bearish video from me today, it's not actually representative of the way I'm trading, but what it is representative of is my overall strategy to explore all possibilities in the market before I make my conclusions. So that's 350% profit on that Tron trade right now. Absolutely fantastic performance right there. And that is all very, very important, because one of the things that we're actually starting to reach now is a stage in this market where if we take a look at the Four Flies dashboard, we are getting very happy with what's going on. Now, granted, we're only looking at a reading of 70 on the Fear and Greed Index, which isn't crazy compared to where we have been and where we could go, but we are still very high up, and it's not going to be too difficult to drive this Fear and Greed rating higher. And it actually plays into a few of the reasons that I want to talk to you about a big market collapse being around the corner for Bitcoin. Because if we are going to be looking at things continuing to go up the way we are, like I said, there's two possible outcomes of that happening. Now, the first one is that we end up pulling back relatively soon because, we're approaching resistance levels, whether that's the resistance level that we're at right now, 38,000, which, by the way, we hit it basically to a T. If you look at the OHLC up right here, 37,999 was our high. So within $1, we hit that area of resistance, and Tone Vase was actually predicting that as a resistance level. I was actually at this financial summit, just wrapped that up earlier today. I drove home at like 5 a.m. today. And he was actually talking about that. Obviously, it's a level that we have been watching on this YouTube channel for many months, looking at this 37.5 level, obviously basically the same price area, or maybe we top out at $41,000 with this other big key area of resistance that I spoke to you guys about in yesterday's video, which is super important. So make sure you're subscribed, smashing up the like button, and actually watching these videos. They're super time sensitive. Go back and watch it. You're not going to miss any important context. It's still an up-to-date video. And the reason that I'm saying that is that that's kind of option number one. That's the more reasonable thing to do. But option number two, and something that's very much in line with Bitcoin's characteristics, is that when we reach this kind of stage where we've already rallied up by so much, it's been more or less 60 days of fucking glory, just absolutely beautiful price action. Yes, we had a little bit of a scare down here. This was really the only scary point in this entire price trend. Lasted about 11 days and dropped us by about 7%, but really nothing big. And I mean, it was big for a lot of the crypto guys in the space, but I wasn't worried about it, and you guys knew about that very well. Just go back and watch my videos from the middle of October. You'll see exactly why I wasn't worried. And because we've had such a nice little trend right here, what does happen sometimes with Bitcoin, actually quite often with Bitcoin, is that, we kind of reach the point where, people like me are like, we need to calm down, we need to settle down, we need to sit back down, we need to relax, we need to, kind of catch your breath and everything like that. And Bitcoin's like, fuck you, I'm going to pump even higher, way faster, way quicker, way more explosively right now, bitch. Just like that. That's Bitcoin. With all of that explosive language. That's how Bitcoin treats us when the more reasonable voices start stepping in and saying, hang on a minute, this is starting to get a little bit excessive. And that's actually very much in Bitcoin's characteristics, and one of the reasons that stuff like that happens is, things like these long and short ratios. Right now it doesn't apply so much if we look at Binance and Bybit, but what we were seeing overall for this entire year on the Four Flies dashboard for this long and short ratio situation is that we did have more shorts than longs in the market for retail traders. And that was a really strong sign that actually moving to the upside is probably going to take those positions out, you know, and what actually happens is that there's a lot of liquidity up where people set their stop losses or where their liquidation zones are. And so the price generally, at least in markets like right now, and it's been like this more or less since 2018, does generally kind of move in the direction that's going to screw the most people over. It's just how it is. You know, don't hate the game, just learn to play it. You know, that's my take. It kind of sucks, but whatever. This is where this is what we're dealing with. You know, and when we start seeing situations like that, then that does mean that actually it's going to be more profitable for you know, the big guys, manipulators, whales, whatever you want to call them, to you know, take the market higher, and that's typically where we end up going. And we've seen top traders have been trading that direction as well. So you know, that's one of the reasons we start seeing stuff like this going crazy. And also, you know, it just becomes a face melting rally. And you know, if that kind of thing happens, it becomes very unpredictable to place where Bitcoin could end up going. We could blast through our resistance levels, top out at some random arbitrary level, and then see a really, really big crash. But one of the big things that is very true, and we're going to talk a lot about this throughout the rest of this YouTube video, is that we've got a really good setup here on this chart for Bitcoin to actually start dropping down. And I do want to talk to you about what that looks like to really help you kind of imagine that. So the first thing that I actually want to pay attention to with you guys on this chart is just to kind of look at why we could be even looking at, you know, something like a 55% drop. You know, we've seen things that are very, very big like this before, you know, in terms of bottoming out. You know, this is a chart that we're going to revisit a little bit later on, and it's kind of built for a variety of reasons. You know, one of the first big reasons that I want to talk about, even though obviously we're aware of how the RSI works, you know, when you have a high RSI, it just means that the market is strong. You know, high RSI implies a relative strength index rating of something very high. So if you've got high relative strength, then you're strong. It's not weakness. You know, but at the same time, how often do you stay in massively overbought territory? You know, at some point, this kind of thing has to come to an end, because relative to where you were before, you just can't keep on outputting the same level of strength. And you know, we might be looking at something that's starting to turn a little bit unsustainable. Now, I don't want to make a big conclusion based off that at all, but if you're the kind of guy that pays a lot of attention to the RSI, then please do keep in mind that, yeah, we have been more or less overbought here, you know, up by 42% within, you know, just a month. You know, I mean, absolutely insane price action here. And we have been overbought for around 3 weeks as well. So without even a single correction, without anything significant at all. In fact, our correction just continued to take the price up. You know, really, really very telling price action that this market is incredibly strong right now. But again, how long does that strength actually last for? Really, really important. You know, and I think this is just a nice kind of taste, or a nice little appetizer to kind of get us started with this bear hypothesis. And again, you know, I have to stress, you've seen my positions, you've seen how bullish I am, and the fact that my positions are still open, I'm still, you know, trading the upside. But my job as a trader, and this is really important, a lot of people do tend to miss this, and that's why a lot of people lose money. You know, my job as a trader is not to flatter my ego, although I love doing that. You know, or to you know, just get around in a fucking circle, you know, and just jerk each other off to the same price predictions of Bitcoin going to the moon, Bitcoin going to 40K, 50K, 60K. We're going to get on our yacht parties and everything out in Dubai and stuff like that. You know, that's not my job. My job as a trader is actually to constantly counter myself. My job is to constantly counter my hypothesis, constantly counter my trading decisions, to second guess myself, to really, you know, run my ideas under intense scrutiny every single day to see if my ideas still hold up. And if they don't, then what I can start doing as a responsible trader is I can start scaling those positions down. You know, I can start closing those positions up a little bit. I can start taking some profits. I can start raising my stop losses. By the way, somebody asked me why I haven't raised my stop loss in some of my positions yet. I just haven't got around to it yet. You know, it's obviously very low right now to have my stop losses at these levels, obviously with that Tron trade, but also with the Bitcoin trade that I've shown you guys as well. I mean, the stop loss is ridiculously low. I just haven't moved it up yet. It's not good. I should have moved it up by now. I'll definitely do that. You know, but at the same time, you know, I also, you know, I'm able to manage my positions on the fly. So, you know, as long as the stop loss is there, it's not as big of a deal, you know, and as long as the stop loss is in a profit, which it's in a massive profit on both trades, it doesn't matter as much. So that's an important note. It's not an excuse, but it's just something I wanted to get out there because somebody did ask, and it's a very, very good question. Now, the other couple things that I want to discuss with you guys, and this is really interesting, this is going to be a lot bigger of a challenge for Bitcoin, is, you know, if we take a look at this on the weekly time frame, there's definitely some stronger weekly resistance up ahead where we are right now. If we look at this kind of horizontal box, I mean, we've got, you know, some real challenges for Bitcoin up ahead right here. If we take a look at this actually on the BLX chart, we can start to look at this chart very zoomed out and start to gain a sense of appreciation for what Bitcoin is actually up against right now. And actually what I want to do is, I mean, first of all, I had this massive green box drawn to kind of represent this resistance zone, but I want to get even more kind of fine with the analysis I'm showing you. I want to become, I want to zoom in a little bit more, get a little bit closer, uptight and personal with this price action here, to really show you what we might actually be facing here. And this is a beautiful depiction of what some of that could look like right here on the weekly time frame. We've got some pretty big, rejections, weekly opens, closes around this green box right here that stretches from 37.7 up to 39.3. By the way, some of you guys from time to time ask me to say price levels on the chart. Guys, I've seen that feedback so many times and I try to do it all the time, but I'm doing like 50 different things at a time and I'm recording these videos freestyling. So I do forget to say them sometimes, but every time I say the price number out loud, it's not a habit. I'm like outwardly thinking about it. I just, obviously sometimes I miss it, but basically 37.7 up to about 39.3, with these price zones. And by the way, if you are watching on phone, you can just pinch and you can zoom in, and that's what I suggest that you do if you miss it. That's on YouTube, of course. And we can start to see that this is a key reversal zone for Bitcoin. And, this was also a key reversal zone, sitting at about 30K. This was also a key reversal zone for Bitcoin where we were seeing a lot of, kind of bullish reversals, some bearish reversals as well. Obviously, throughout 2023, this was a pretty dangerous, pretty difficult zone for Bitcoin to break. And as soon as we break that one, no surprise at all. It's exactly what I was telling you guys since the very beginning of this year and even way before that is, when we break the 30K range, it should be quite easy to get to the top of it, up to the 40K range. And that is basically what we've seen. I mean, within a matter of just a couple of weeks, we've gone from 31,000. In fact, I mean, if we measure it from here, we've gone from 27,000 all the way up to 37,000. That's a $10,000 gain, and that's happened within 3 weeks. And, by comparison, we were trading in this sideways range for 7 months. So 3 weeks versus 7 months, and this range, and it really puts it into perspective because this range from low to high was a $6,500 range. So within 7 months, we only managed to rise up by $6,500, and then bam, within 3 weeks we rise up by 10K. I mean, that is the power of sound analysis that we have had for a very, very long time on this YouTube channel. Again, those of you that have been subscribed have been very, very well aware of that. But again, these things, when everybody else is starting to really get their party poppers out and getting very excited and starting to book their Lambo rentals at Miami down in South Beach, this is where I'm going to start stepping in and saying, hang on a minute, guys, let's take a couple steps back and let's look at what we're realistically facing, because this is heavy weekly resistance that we've got on this chart right here. And if we do zoom in to look at what this actually represents on a slightly more intimate time scale, I guess. This is definitely where we started to see some problems for Bitcoin, some support for Bitcoin, on both sides. We saw some clear rejections, some clear challenges for Bitcoin in this area when we entered these kind of ranges, some very, very clear support, some key reversals on the top of the line and the bottom of the line. Just all around, everywhere you look, every time Bitcoin has ever interacted with this price level, it's been a big deal for Bitcoin. And I think that really tells you a lot about what we are going to be dealing with here. And it also kind of really explains why we've seen a big rejection off this daily candle yesterday. This chart is always 1 day out of date, by the way. Please keep that in mind. So, it also really, I think, quite well explains, quite particularly I don't know what the word I'm looking for is, accurately, shows us why we're dealing with a lot of resistance in this range. But then again, we come back to this chart and it just gets taken a step further when we look at the weekly Ichimoku cloud, because if we go ahead and throw that weekly Ichimoku cloud onto the chart now, the other thing that we can see very clearly with this chart is that we have got a massive zone of resistance that we are in right now on the weekly time frame. And the weekly Ichimoku cloud is not the most formidable resistance that Bitcoin has ever faced, but it's definitely something. Even when we get slightly above it, we got a nice little headway above it, but it still didn't really matter. I mean, it kept Bitcoin suppressed for a really, really long time. Over here, we hit the very top of the cloud, and then that was the trigger before the COVID crash. Even again, like right here, I mean, this cloud is still dangerous. It doesn't matter what time frame you're looking at it on. If we take a look at this, zooming back, scrolling back even further, I mean, it took Bitcoin from the moment that and by the way, this cloud wasn't that big. This was a 76% range for the cloud when we first entered it back in 2015. And I know 76% is a big range, but, to put this in perspective, we've already done, more than double that, nearly double that, from our low to our high. And this is in a very mature market compared to 2015. This is in a very slow market. It's not, I don't even need speech marks for this. It is unequivocally a very slow market, that we're in right now in 2023 versus 2015, and we've still nearly doubled that move within a year. So I think it's really important to kind of maintain perspective where, like, even though the market is more mature, we're still pulling off bigger price action than this, and this really goes to show that 76% ranges for Bitcoin really shouldn't be that challenging for Bitcoin to break. Yet it did actually take, from the moment Bitcoin hit this range to the moment we actually properly broke out, it did take Bitcoin nearly a year, and that was back between 2015 and 2016. So while the weekly Ichimoku cloud is not the best application of the Ichimoku cloud, at least in my opinion, it's definitely not a bad one, and it definitely does tell you something about where you should expect resistance. And to simply say that, well, Bitcoin's more strong than that right now, and Bitcoin's stronger than that right now, it's not really going to be a problem, to me is hopeful thinking. It's wishful thinking. I mean, I want to be with you, I want to agree with you on that stuff, but I just don't. This is strong resistance, and it's right here, and it's a big cloud. It's much bigger. Oh no, it's not my bad. It's 56%. It's still a very, very big cloud for Bitcoin right here, and it dominates the entire chart. I mean, it really is a big deal. On the weekly time frame here, when we started to fall to the bottom of this, we actually triggered some really nice bounces. So it definitely can be useful. And obviously on the daily chart, it's a much more obvious obviously useful indicator. I mean, look at these two beautiful stunning bounces we had off the cloud right here. Obviously not always perfect, but still very, very good to use overall. I mean, look at the resistance, guys. Just absolutely insane when we were using it as resistance. Just dropping down. Absolute destruction. My God, just hideous. Absolutely horrible, for the Ichimoku cloud right here. So, big moves coming off this indicator on the daily time frame, and obviously still quite useful in the larger time frames as well. So I think that is very, very important to take note of, because what we've actually got with this chart is some confluence started to build up, where we've got this pre-existing horizontal area of resistance falling close to the top or at the top of this Ichimoku cloud on the weekly time frame, showing us that we're starting to get kind of multiple factors here lining up, showing us that we should potentially start to expect some resistance up in these ranges as well. So I think that is really, really important to keep in mind. Now, if we are going to be looking at a reversal like this, there's a couple more things I want to get to, but before we do, if we are going to be looking at a reversal like this, it's really not a bad thing. I mean, as a trader, you already know the deal. We're looking to trade based off this volatility. I mean, if we're starting to get big drops and we still expect upside, or maybe if we don't, it really doesn't matter. It doesn't. It's not a big deal, because what we're actually looking to do is make trades based off this price action. We're looking to make trades based off this volatility, and the beautiful thing that we have available to ourselves are support levels that we can actually predict and then work from. And what that does is it gives us nice kind of entries for positions. One of the things that we've been talking about on this YouTube channel that many of you guys have now taken advantage of are these huge offers that the exchanges I'm working with are giving you. Now, a lot of you have already gotten these, and shout out to those of you that have, because this does take potentially up to a day to get in some of these cases, maybe even longer if you're unlucky. But if you ever have a problem, then please do reach out to me. When you sign up to Bybit using my link down below, when you start trading, you're going to get up to 30K in deployable capital. You can deploy that any way you like, anywhere you like, and you have all of the profits that you can withdraw, using those funds, which is really, really cool. CoinW also gives you $50 without doing KYC. It's a no KYC exchange. You can trade without KYC, but without doing any KYC, without making any deposit, nothing at all. Just make your account, open a futures account using my link. You get $50 for free to trade with. Super, super cool. If you deposit 100 and you make any trade of any amount, you get another $100 bonus. Super, super cool. Very, very amazing offer to be having right here. And BingX also taking it another step further. Also no KYC, but huge bonuses up for grabs. So really, really cool offers available to you guys. Obviously, you should have had these a long time ago if you're interested in them, but better late than never. Definitely do check them out if you are interested. It's a great time to be able to have this capital to deploy, because at the end of the day, it just shortcuts. Bottom line, having an extra 30K to trade with is great for anybody, because that's just free money that you can snowball into the market, and you can risk it however you like. Doesn't really matter. So super cool offer, well worth checking out. But I do want to kind of carry on and talk to you a little bit more about these other reasons before we do get to more of those kind of actionable setups, and just tell you why I think that we are potentially, starting to approach some of these danger zones in the chart. And one of the other big charts that I do want to talk to you guys about is going to be this death cross chart right here. So now death crosses are formed with different moving averages according to different people. You've got the 50 and 200, the 100 and 200, whatever. I mean, it really doesn't matter. We're not looking for complete agreement across the board here, but what we are looking for ultimately is just the characteristic of seeing that these shorter term moving averages cross below the longer term ones. And we have got that death cross right here now on the weekly time frame, just with simple moving averages. So the 100 crossing below the 200, printing a death cross for us. Now, how bad are these death crosses? I mean, everyone's different on the death cross discussion. Personally, me, I'm not too worried about them. We're on the daily time frame here. We formed a death cross, on the 11th of September at the fucking bottom, and then the market rallied up. It's just not something I'm worried about. Then we formed a golden cross, later on, in the same month, and that indicates some strong upward price action to come. So, it really, it's going to be different for different people. But, if you get them right, if you time them right, if you look at the right kind of time frame, then, for example, this death cross that we printed right here at a price of $43,000, if you decide to exit the market based off the death cross, you would have saved yourself so much pain. You'd still, be in a better position today, assuming that you didn't make any trades in the meantime, than somebody who just held without doing anything else. So, it really, really does say a lot, I think, about, where the market could be going if you put a lot of weight on these. Again, these death crosses, they fire off at times that just aren't the best. I mean, this death cross kind of fired off at about 35, 36, whatever, $1,000, and at least for the next year, that would have been a really bad trade. At the same time, this golden cross here, firing off at about what was this, 45,000, and you would have only been in profit for about 3 months, so it really depends on where you're at, and it's definitely not the best indicator in the world, in my opinion, but still something that a lot of people pay attention to, and that's why I did want to talk to you guys about it. But the next one that I think is potentially quite interesting is actually the S&P 500. It's something that we've been watching a lot, and depending on how you look at this, it's a bullish chart or it's a bearish chart, and I want to show you the bullish hypothesis first, because this is the one that I believe in. And also, by the way, you can start to see we're getting close to a death cross on the S&P 500 as well. So, it's very interesting the way this happens. We did have the golden cross right here up at 41.50 roughly, and you'd still be in a profit, if you traded based off that. The death cross here, came at 42.10. I mean, it's just, it's so open to interpretation. It's really not my favorite. In fact, if anything, it can actually be used in the opposite way in my experience, but it's just too inconsistent in both directions. But like I said, the reason I'm including it is because a lot of other people do take this indicator seriously. And if we do take a look at the S&P 500 here, we've seen a really, really big drop. But one of the big scary things that I did discuss with you guys is just the possibility, if we take this off if we put it on, off the logarithmic chart, is if we just kind of look at the possibility of the S&P 500 being in, one of these kind of bubble pop patterns here. It's actually very typical. I've given you guys the contrast between this and Bitcoin. I actually want to show this to you guys again. It's very scary, not necessarily realistic, but still something that is worth discussing anyway. And we really should be putting our fears to the side, just so we can have productive conversations on this kind of thing. So let me show this to you guys so that you know what I'm talking about. With the S&P 500 looking like this right now, you can definitely try and draw some parallels between Bitcoin and the S&P 500, where you get this nice big blow off top. So you get the nice little move that comes first and then the big blow off top. So I mean, this chart is a little bit unrealistic. I mean, Bitcoin on most other exchanges topped out over here, came back down, and then got the blow off top all-time high. So that's very similar to the S&P 500. Then we came down very low, and we formed this weird high in the middle. So we came down very low. We formed this weird high. This weird high. Or you could even say this weird high in the middle. Both apply. I would say that this is the correct one to look at. And then we form a higher high after that. This is such a badly drawn setup on the chart, but hopefully you can start seeing what I'm talking about. Let me actually put this on the 8-hour time frame, because I think that it's going to be a lot easier to show you my point on the 8-hour time frame. Just to stretch out the price action a little bit more, we can start to see what I'm describing with a little bit more clarity. So we get that high, we get the high in the middle, and then we get the higher high. So here it is, those three highs. And the reason that I'm pointing this out is that if we actually go ahead and take a look at this S&P 500 chart, then you can actually start to make an argument that the S&P 500 has fallen below support, and now it's kind of struggling to hold that level, or at least we're not, skyrocketing above that level right now. So, this could definitely be a warning sign that there is some carnage to come for the S&P 500. I mean, the fact that the S&P 500 is in this place in the first place is definitely concerning. I think it's fair to say I don't really hear of anybody refuting the argument that a lot of the stocks that comprise the S&P 500 and other kind of indices, and just other markets are definitely overvalued. I mean, if you look at them in terms of market cap and so on. I mean, Tesla had to do a fucking stock split, in the bull market. Just because the price was getting so crazy. So, I think that these are important things to keep in mind. You can definitely make some very, very strong arguments that, these markets, these indices do need to start pulling back. And the reason that this relates to Bitcoin is typically that there is some sort of correlation where, it doesn't matter how exact that correlation is, and it doesn't matter that Bitcoin has decoupled from this correlation, at least in the recent weeks. The overall point, and I think a lot of people miss this, is that, and they miss it just because they're literally not paying attention, or they literally just don't have skin in the game to think the way you do when you do have skin in the game. If we're seeing these big conventional, safe, traditional finance indices performing well, then that's where you're actually going to start seeing people being a little bit more willing to take on risk. But comparatively, if you're in a situation where your safe asset isn't making you money and it's actually losing you money, well, then why would you want to take on more risk? You're going to feel like shit. You're going to be losing money. You're going to be upset. You're not going to be willing to take on more risk. You're not going to feel like a winner. When you feel like a winner, that's when you start feeling like, okay, I can touch that. It turns into gold. I can touch that. It turns into gold, kind of thing. You start getting that invincibility feeling. You're going to have the opposite if you're losing money with your safe investment. And so if that's what happens, then, we've already seen the effect of that on Bitcoin. I mean, if we just look at this chart right here, I mean, this was the S&P 500 throughout 2022, and it was absolutely horrible. In fact, the next chart that I want to show you, was just a very, very simple example of what happened with the S&P 500 with this 35% drop that we saw from August to November of 2022. I'm sorry, this was with Bitcoin, this 35% drop. And where's the other chart that I wanted to show? I think I actually, right here, and this was the S&P 500 chart by comparison. The very same time frame, 18% down. So it just really goes to show that when we're looking at these bigger drops, when we're looking at any drop of the S&P 500, if it's on a large macro scale, Bitcoin does tend to reproduce those drops, but much stronger. In this case, 2 times stronger. But it could be more, it could be less. And I think that's really, really important to be keeping in mind. And of course, if the S&P 500 does play out this kind of Bitcoin bubble pop pattern, then I mean, it's really down to Dumpsville for Bitcoin. I mean, it's going to be absolutely horrendous for the S&P 500. Again, not necessarily something that I think is going to happen, but I'd be a fool if I wasn't taking it seriously anyway. I'd be a fool if I wasn't looking at it anyway. That is my job, of course, at the end of the day as a trader. It's not comfortable, it's not fun, but that none of that stuff matters, because at the end of the day, you get to drive a Ferrari. If you're doing well at the whole trading game. So I think that is really important to keep in mind and just stay focused on within these markets as well. So a couple of really, really big reasons here that I think are well worth paying attention to. Also, the altcoins starting to look very interesting as well. Bitcoin has lost some dominance over the last day or so, which is very interesting. We finally started to see Ethereum wake up. It is still abysmally low. I mean, do not start celebrating now. We are at a resistance level right now, and Ethereum has shot down a little bit because of that, so nothing surprising. Ethereum only becomes interesting when it gets back up to this range, but the key thing I want to talk to you about, and I did say that I do think Ethereum's in a weak position, is that when you're moving down, you have to expect reaction rallies. Whether the reaction rally is going to stop at this resistance or this one, I don't know. It could go very high. It might not. I really don't know. But this move up so far doesn't change my hypothesis. I think that there's a long way down for Ethereum to go, just based off the fact that we've revisited this low, which is really not a nice, really not a comfortable place for Ethereum to go, in my opinion. And that's something which I think is really important to also kind of anchor ourselves with and pay attention to. So that could definitely be an interesting setup starting to form. But right now, if anything, I might just be looking at shorts in the altcoin market. It really depends on the levels we hit. Ethereum hasn't even, swept its high from April of this year, by the way. And, by comparison, Bitcoin was at 31K, you know, so Ethereum is really, really far behind. Other altcoins, not so much. I mean, you know, Tron, you know, I've been in a big trade on Tron for a long time now. Off this was actually my entry level right at the bottom. Absolutely beautiful. You know, and by the way, I do want, from the absolute low that Tron set up to the absolute high that Tron set, that is a 150% move. So that's a 2.5 times gain that you would have had on your capital. I have already done much more than that profit, and I've just traded a sliver of that move. You know, and that is the power of a well-placed leverage trade. You know, this is what I do. This is what I love doing. I've more than doubled that gain, looking at a 360% profit right now as we speak. And I didn't have to wait from November of last year to November of this year to make that money. In fact, I did it all within a much shorter period of time. Whereas if you were holding and assuming you got the perfect fucking entry right down at the bottom, you know, it would have taken you, you know, literally an entire year. You know, for me, it took me just about 2 months, and I've seen double the money. You know, I think this is really important. A lot of people, when they hear my trading strategy, when they hear me talk about the way I trade and how I'm like, calm down, trade slowly, catch your breath, don't trade with too much money. You know, I say all of these things that are actually very boring, but obviously we all know that it works. People think that I make money slowly. Very much not the case. You know, one of the beautiful things about the way I trade is I'm just not suffering such big losses. So I'm also not kind of taking setbacks. You know, somebody mentioned in yesterday's video, yes, Sammy, we know you've made a good trade, good job. You know, basically saying like, you know, give me some more new, you know, give me some news, give me something new. You know, but my response was basically, I mean, why would I, you know, open new trades when I'm already in a really, really good trade to begin with? Now, I'm still always looking at the market to find great trading opportunities, but the reason that I trade the way I do, the reason that I net the results that I do, is because I'm not jumping out to take ridiculous risks. You know, I'm doing my thing, I'm doing it sensibly, I'm doing it calmly, and that's why I'm not taking, you know, 3 steps forward and 2 steps back all the time. You know, and I'm actually able to protect my money. And what you'll see is a lot of people actually trade way more than me, and they'll make way more money than me as well. But by the end of the year, they'll also lose so much that they might actually be behind me a lot of the time. You know, and at what cost? I mean, you know, the mental, you know, stress that you'd pay for and so on. I mean, you'd rather just do your thing, go to the gym, spend time with the kids, you know, whatever, you know, instead of, you know, no one actually wants to sit on their laptops and look at the charts all day, and certainly not me. I've got much better things to do with my life. So, you know, I'm really only using this as a means to make money. And I think a lot of people do start kind of forgetting that. So there you go, guys. Beautiful video. Thank you all so much for watching. Make sure you do check out our recent videos, especially the most recent one. If you did miss that one, that was big. Again, this video is just here to kind of anchor expectations, make sure that we can kind of stay reasonable with what we're expecting in this market. Obviously, there are huge bonuses available to those of you that want to take advantage of the volatility in this market, especially if you want to do it risk-free, without any deposit, without any KYC. CoinW is a beautiful exchange to do that with. All you've got to do is open a futures account using my link, and you get $50 for free to trade with. You can do anything with that $50. You can leverage it up 100x and trade with a $5,000 trade if you want to be absolutely stupid, you know, or you can do something a lot more sensible. Also, if you just deposit a $100 amount of any crypto, and then you trade anything worth $1 or more, or anything at all, you're going to get another $100 for free. So you're basically getting $150 as a sign-up bonus on this exchange, which is super cool. You can 2.5x your capital when you sign up using my link down below. Super cool offer there. And BingX also giving you access to traditional finance markets. So if you want to trade things like the S&P 500, if you want to trade things like Tesla and Apple stock, that is all available right there as well, which is super cool. All right, guys, I really hope you have enjoyed this video. Again, very deep, very informative, and I will see you all in the next one. Cheers.